Welcome to A-Team Group's RegTech Summit Virtual Event 2020. We'd like to thank our platinum sponsors, SmartStream and Bureau van Dijk, our gold sponsors, the Derivative Service Bureau, ACA Compliance Group, AWS Partner Network, Axiom SL, Capitec, Univista, Automated Intelligence, and Flamin KYC Software, and our event partner, the UK Department for International Trade. Connect with your peers on the networking page, and if you have questions for our speakers, please use the comment function next to the live stream. Thank you for attending and enjoy the session.
Hello and welcome. My name is Andrew Delaney. I'm President and Chief Content Officer at A-Team Group. Hi everybody and welcome to our RegTech Summit virtual event. We're thrilled to be able to continue to bring you this event in a virtual format. This is our second virtual RegTech Summit this year, following our earlier event in June. And for today's session, and indeed throughout the week, we will be picking up on many of the themes from that discussion and continuing the conversation around how you are navigating the regulatory environment in these particularly challenging times, and challenging they are. Before we start, I would like to make a point of thanking all of our speakers and sponsors for their tremendous support and enthusiasm in helping to make this event happen. We at A-Team hope you will find it a valuable learning and networking experience. As always, at our physical events, I encourage you to connect with our sponsors to see how they can help you. And I would encourage you to take part in their various draws and giveaways. There's a bunch of things on offer this week, worthy prizes such as Amazon gift vouchers, Fitbit watches, and I believe a Microsoft tablet. You will also see that we've matched you with other delegates based on similar interests. So you are able through the platform to connect with them. There's a chat function to help you to make new connections. And this should help you do that in this virtual environment. A brief explanation of how the event is going to work. The RTSV, as we call it, the event runs over 5 days. Basically, we've done that so that we can squeeze in as much content as we usually would if it were a physical event, so you won't feel shortchanged. We'll have a daily live stream taking place at 10 AM Eastern Time, 3 PM GMT, that's London time. If you can't make a session, you don't have to fret too much. You can watch the recordings later, as they will be available on demand immediately after each daily session. Let's talk a bit about today's agenda before we get started. Coming up, we will show you a 1-minute pitch from Xtendr, who will showcase their solution to you, a kind of mini commercial break, if you will. This will be followed by our power panel discussing the outlook for regulatory compliance and RegTech in a post-COVID world, should we ever get to that point. And following that, we have a roundtable Q&A discussing how to leverage RegTech in today's complex regulatory environment. I should point out that we'll be using Slido for Q&As and polls, so you can access Slido to the right-hand side of the screen, and we do encourage you to get involved. So please ask questions to the speakers on the live panels, and please do also vote in the polls. Okay, I think that's just about enough from me, at least for now. So let's get started. And as I said, first up is a RegTech startup elevator pitch from Xtendr, who have 1 minute to showcase their offering. So here we go.
What's in common in KYC, AML, insurance fraud detection, and international tax fraud detection? They're all important, expensive, and all of them could be significantly improved by accessing larger datasets. Imagine a more efficient and faster KYC procedure. Imagine stopping cross-institutional and cross-country money launderers, Or imagine spotting insurance claim fraudsters and fraud rings. Sounds good, right? But using more data raises fundamental security and privacy concerns. At Xtendr, we developed a proprietary cryptographic solution called Zero-Knowledge Equivalence Preserving Data Sharing. It allows parties to collaborate and securely share transactional-level customer datasets without ever revealing plaintext information. Of course, it's GDPR and personal privacy friendly. If you want to learn more, get in touch because we have the tools for you to deliver a privacy-proof solution.
Wonderful. Thanks to Xtendr, and you can follow up with Xtendr and set up a virtual meeting or a chat with the CEO, Virag Reddy, who I'm sure will be pleased to tell you more about how they can help you. Okay, so let's move on to our first panel. We've got a great group who will help us on what I think will be a fantastic panel, looking at the global perspectives, the outlook for regulatory compliance and RegTech in a post-COVID world. I think the panel is joining us now. People from the UK, Europe, and the US joining. And on this moment, I will start to hand over to our moderator for this session, Joanne Barefoot. Welcome, Joanne. Joanne is herself a former regulator. She's a RegTech advisor, and she's now CEO and founder of AIR, the Alliance for Innovative Regulation. So with that, over to you, Joanne.
Thank you, Andrew. It's wonderful to be here. Thank you for that introduction. My organization, AIR, is a nonprofit dedicated to helping the financial regulatory system modernize and digitize. And I think we can see that we've been packing a decade's worth of innovation and technology adoption into a few short months this year due to the pandemic. It's as if the trends that were already underway have had rocket fuel poured onto them. So we have a wonderful panel to discuss this today, representing bankers and regulators and RegTech perspectives. And we want to start by asking each panelist to introduce yourself briefly and mention your connection to RegTech. Let's start, Ian, with you.
Thanks, Joanne. So my name is Ian Hollowbred, and I head up RegTech at ING Labs.
Great. Peter?
Hiya, Joanne. My name is Pete Thomas, and I co-lead on data innovation at the Bank of England.
Great. How about Richard?
Hi, I'm Richard Rosnholz, and I'm the chairman of the Nordic RegTech Association.
Wonderful. And Vaidotas?
Good morning, good afternoon. My name is Vaidotas. I'm working at the European Banking Authority and leading the EBA's work on RegTech.
Great. Jaime?
Hi, I'm Jaime Werke, and I head up FINRA's Office of Financial Innovation.
And Melissa?
Hi, Melissa Nettram. I am the Chief Innovation Officer and head of Lab CFTC at the U.S. Commodity Futures Trading Commission. This is our innovation arm of the CFTC.
Wonderful. So it's wonderful to have you all with us. We're going to begin a discussion in a moment, but before we do that, we're going to kick off with our first question to the audience on Slido. And that question is as follows. How has the impact of COVID informed the need for a change to compliance at your organization? So please go into the Slido tool to vote. The answers to choose from are: we need to invest in better systems and more automation. Second, we need more expert human resources. Third, we need more automation and less human resources. Fourth, we need more and better communication with regulators. And last, we don't need to make any changes as a result of COVID. So please answer those questions in the Slido tool. And while the poll is running, we'll look at the results as they come in. But let's get started with our first question, which is on how COVID is disrupting the market. So Vaidotas, let me start with you. COVID has caused unprecedented disruption to financial markets all over the world. How are regulators responding to this? adjusting their approaches, and what impacts are those steps having on how financial institutions manage their risk and compliance strategies?
Sure. Thank you very much. Very good question to start the discussion. So I would like to highlight that immediately after the COVID outbreak, the European Banking Authority took actions to support the measures being taken by the national governments and other bodies to address and mitigate the systemic economic impact of COVID on the banking sector. So we had a number of communications we have seen around the globe where supervisors try to give the banks and other financial institutions, but as well consumers, the clarity of the application of prudential rules and supervisory measures in these difficult times, aiming threefold: to support lending to the real economy, maintaining high standards of conduct and consumer protection, and also taking measures to tackle the financial crime, which we see a little bit increasing over that time. So in practice, there was communication giving more time for the banks institutions, delaying the deadlines, delaying on-site inspections, postponing stress testing. Very interestingly, increasing contactless payment limits across the Europe to allow people contactless payments, to also very important use of technology in this crisis. So in a nutshell, the regulator supervisors focus banks to look at the core activities, but not to forget the additional risks that they're facing. And the risks are there: operational risks, digital transition risks, AML risks. Everything is there. And the guidance really helped to look at all of these. So the message for the institutions, what impact it had, we didn't see any major business disruptions or ICT incidents. So it looks like that risk management and compliance function worked well. But nevertheless, going forward, there is a very increased need to make sure that technology works for the compliance, but does not impede it. So the focus needs to be on three aspects: people, process, and technology. And everything needs to work very well on this.
Thank you. That last summary fits well with the Slido question that we'll hear the answers to on how people are responding. Peter, let me go to you and ask the same question from the standpoint of the Bank of England.
Sure. So I think very, very similar experience. Huge amount of work done very, very quickly. I think one of the things certainly from London that we've really benefited from is leveraging the relationships we've got with other central banks, regulatory colleagues in the UK, in the EU, and globally. It's been a truly collaborative effort. It's been incredibly quick what we've had to do. And I think I don't want to go through a whole load, but a lot of that here is focused on working with our colleagues on the fiscal side and looking at how we can use the financial services sector to get emergency financial support to the real economy. Stuff around sort of pausing dividend payouts has been quite contentious in the UK. Also adjusting and clarifying a number of regulatory measures. So we've got our countercyclical buffer now at 0% until March 2022. In terms of what does that mean for kind of risk and compliance functions, I think the main thing it means is you've seen an awful lot of change in an incredibly short amount of time, changing priorities and also changing policies. And I think generally, the financial services sector has actually held up pretty well to that. I think we've all mucked in and we've all got on with it. I think what we've also seen is we've seen that encourage a lot of firms to think more about agile and innovative ways to ensure that they can manage risk and comply with regulation more effectively. And I hope that's one of the few positives we can take out of 2020 into next year.
Yeah, well said. We at AIR have been saying that regulators are going to have to speed up, and that doesn't come naturally. Again, I'm a former bank regulator. It's, these agencies are sort of designed to be very careful and deliberative, which makes them slow, and suddenly everyone has to work quickly. It's a real challenge. And as you say, people have really risen to it. Let's go to looking at the results of the poll question. So they are, overwhelmingly, hang on, I need to change my screen here. They're overwhelmingly more than half saying we need to invest in better systems and more automation. And
I think, hi, Joanne, I think that's pretty much as we expected to see, that we need to invest in systems and automation. Coming from a bank and a financial institution, I think more now than ever, the impact of COVID means that we need more digitalization. And I think all banks are looking at how they achieve this. So I'm not surprised by these results.
Good, great. So let's go back to the panel. And Richard, let me turn to you, looking from the Nordic perspective. When we think about the industry adoption of these new kinds of technologies, what advice do you have for financial services companies on how they should best adapt to this changing regulatory environment in the midst of COVID and beyond?
I think it needs to have a plan. Of course, any change without a plan, it's not going to achieve the results because you don't know what the results should be like. So when I've talked to financial institutions in the Nordics and also consultancies and others in the ecosystem here, I've always said that we need to you need to have a strategy. You need to have a plan for all of this, but because all the regulations, sometimes it can be seen as coming from, every which direction, and it's difficult to align them and handle them in a structured way. But unless you have a strategy for how to do it, you're not going to be able to achieve cross-pollination between the different regulations. You're not going to be able to utilize the same data possibly for different regulations. So I think a lot of it can be won by a lot of handling, a lot of structure can be done when if you take a step back and you look at it, not just meeting or hitting back every tennis ball that comes your direction. Absorb it, strategize, and deal with it.
Thank you. Let me ask our two U.S. regulators to come in on this conversation on advice for the industry in this environment that we're in. And let me start with you, Melissa, speaking from the CFTC standpoint.
Sure. Yeah, I agree with what Richard said in terms of having a plan. I would say that you should have regulators as part of that plan. The financial services industry is a very regulated industry, no matter where you sit around the globe. And meeting with regulators pretty early on in your plan will only help down the road in order for you to move faster. Regulators, as Joanne mentioned, regulators don't move fast, and our regulatory process is not as fast as all of you in the industry and tech community. That being said, many international regulators have offices similar to mine, innovation offices, that can meet with you and not necessarily give you a stamp of approval or give you legal advice, but can help steer you in the direction that you should be going. We are governed by the Commodity Exchange Act here in the US at the Commission, and it's a pretty complicated, large book of regulation. If you're just entering into this space, it's very concerning. You don't know where to turn to. So go to the innovation offices early on. They're not going to stop or hamper your process. In fact, that's why the innovation offices are there, in order to help you and help you navigate.
Thank you. Jaime, you lead the innovation program at FINRA. What would you add?
Thanks, Joanne. Before I get started with the direct answer, I should probably just use my standard disclaimer, which is the views I expressed here today are my own and not necessarily those of FINRA. And I would just maybe echo something that Richard said about, kind of stopping and absorbing. I would phrase it as changing regulatory environment is not something that's new. So, regulatory environments have been changing, through ebbs and flows since there was regulation, really, right? So it's important just to pause and see kind of what are the new circumstances and how does that affect your business from an operational standpoint or otherwise, and see how that relates to the regulations that may exist. For example, as a result of COVID, we have actually put out kind of information and guidance on FINRA's website that speaks to kind of, how you should potentially deal with various types of issues related to COVID. And I think most other regulators have taken a similar stance where they've tried to provide flexibility and they've tried to provide relief where they can around issues around that. So I think that's the first thing, right? Just maybe stop, take a breath, and figure out kind of what are the issues. And if there are issues, go talk with your regulators, or like what Melissa noted, and figure out what you need to do from your own vantage point. The other thing I would just note is that, as there's technology overlays to some of these issues, it's important to think about kind of what the governance around that may be, right? So before adopting any type of automation system or something more advanced like an AI system, it's important to make sure you have the infrastructure around it and you're not just moving kind of over to it because something looks kind of like flashy and catchy, but you've got an infrastructure around it that can like absorb when things go wrong, or you're thinking about when things potentially go wrong in the future.
Thank you. We are going to go to our second poll question. If everyone would prepare to vote, I will read the question. In which areas do you anticipate the biggest spending on RegTech in 2021? And the choices are regulatory reporting, risk management. Third is KYC, AML, and identity management and control. Fourth is real-time monitoring of compliance and tracking of regulations. Next is transaction monitoring and auditing, and last, other, none of the above. So if you'll vote on that, we will start into another question and come back to the poll results shortly. So let me turn to you, Ian. Wait a minute, let me just organize my conversation here. So as we think about the spending issue that we're asking the poll questions on, Ian, let's go to you and talk about how COVID has changed your spending and investment in RegTech solutions and how you see the RegTech market evolving in the next 12 months, given the changes underway.
Yeah, I mean, I think the impacts of COVID's not just changed the RegTech market. I think it's changed every market, and the need for digitalization, as we're all on now, all on Zoom, demonstrates how markets and how digital has become the forefront of every financial institution and even non-financial institutions. And I think, obviously, fintechs and regtechs probably have got more opportunities now than ever to enter the market and really demonstrate impact. I think prior to COVID, I think there was a lot of questions on the true value of regtech. Is it really going to solve for everything, and the difficulties of integrating it? I think people's mindsets have begun to shift, and I think people are now saying, how can we implement this and how can we benefit it? So, and I think as we move along, and even if we come out of COVID over the course of the next year or so, I still think that desire to have a digital agenda and have more focus on these technologies in the regulatory space will grow. I think some of the big questions on the future is how do they become interoperable with the legacy platforms and the existing platforms, which I think is a big challenge for the market as a whole. How do we really maximize these solutions so they help us address the regulatory burden?
You're pointing to the interoperability issue, which has been huge, and to the challenges in getting RegTech adopted. What would you identify, Ian, as main barriers to faster or more widespread adoption?
I mean, I think there's a couple. I think the awareness in the industry, if you look at how many solutions are out there in the market, there needs to be an awareness to match against the problem. I think once the awareness is there, the second challenge is validating some of these technologies. The use of data in them is obviously difficulties to go through, risk assessments and so on and so forth. And then probably the third and the biggest challenge is operationalizing the technology. And getting that technology to work at scale at large enterprises to really really make that difference for the individuals. So I think they're the biggest challenges that the market faces today.
Well, thank you. A lot of the best RegTech companies are young, and that makes them perceived as risky just because they don't have the long track record, which is definitely a challenge.
Yeah, definitely.
Peter, let me go to you with the same question. How do you see the impact in terms of spending and investment in RegTech solutions, and how the market will be evolving over the next year?
Sure. So I agree with a lot of what Ian said. I think the main thing I would add is that we've certainly seen at the start of this year a decrease in innovation budgets across the board, and a decrease in venture capital spending. And hopefully we're seeing that start to come back. And certainly, vaccine dependent, if we get into a recovery that gathers pace next year, I think as Ian says, the level of disruption we've seen in 2020 could actually be a real catalyst for change across the RegTech market. The other thing that I'd probably flag is, as well as the interoperability point with legacy tech platforms, we've also seen a huge increase in willingness to really think more innovatively about the processes and business kind of operations that compliance functions and risk functions have over the last kind of 12 months. We've all been forced to think differently. And for me, one of the major barriers to RegTech adoption was actually a certain amount of inertia within the established firms and the established compliance functions. And I think hopefully COVID has actually begun to sort of raise questions about that that can be actually be answered by RegTech.
Very interesting.
To follow up, Peter, on what you're saying about the decrease in budgets and such, and it's interesting because what we have seen in the Nordics is an increase in the innovation from entrepreneurs and such, because maybe that people do have extra time when not communicate or commuting and such. People will sit around, or they're in their home office. They got nobody to talk to, no coffee machine or copier to hang with their friends during breaks and such. People would rather use this time, and they will come up with different ideas, and it's then going to be a challenge, and that will be up to the investors and VCs and such, if people can get the funding to develop these innovations or ideas or possibilities that they come up with. So it's a two-edged sword here in people working from home around this specific perspective.
Yeah, I would certainly agree with that. Definitely more ideas, and hopefully next year more funding for them.
Yeah.
Me too. Does anyone else have a comment on this one? Okay, well, I, for one, am eager to see the results of the poll. So let's put those up. So very interesting. The third, I think it's in AML, KYC, and identity management, and a lot in real-time monitoring of compliance and tracking regulations as well. Really interesting.
And I think, Joanne, obviously that's, again, not very surprising, because KYC is probably the biggest budget spend on institutions. And I think it will continue to be the biggest budget spend for the next few years. I think, interestingly, I think data privacy will move up as well, which is somewhat identity management, somewhat related. But certainly from an industry perspective, obviously we've seen significant KYC fines being placed on the industry. So I totally agree with the poll on this as a priority area.
Yeah, I'm a bit surprised that the risk management is not come in at a larger part of this, due to the fact that the changing in risk with people working from home and just the completely different way of doing business that we have right now. And maybe it depends on if you bring in, the cybersecurity aspects of things into RegTech, of everybody having to access almost all the data at their organizations from afar.
So that's a perfect segue into our next question, actually. And you've touched on it, Richard, but as everyone is shifting to working from home, working remotely, some of that may become permanent. And it's certainly been a massive, rapid change. What does it mean for digital transformation initiatives and for working practices as we strive toward a digital agenda? Richard, feel free to add more, or Jaime, I'd love to hear from you, and Ian also on this one.
Sure. There are two areas I've really seen things changing, or at least when I've been talking to firms, they've been saying they've been focusing in on. One is around surveillance and monitoring of staff and communication and collaboration efforts that exist. It's different when you are in the office with someone, especially, for example, like on a trading floor, a trading desk, where you can actually kind of go in and say everybody has to turn in their cell phone before they go on the trading desk, and there's limitations on what they can do. If they're engaging in those same activities for home, the way you're able to surveil drastically changes, right? And developing systems around that to make sure that you have an appropriate level of surveillance that exists, but not one that's overly intrusive, I think is a challenge. And I think, it's a challenge that a lot of firms have faced. And it's one that they have kind of deployed various types of technologies in order to try to help address. The other place where I've heard firms talk about kind of changes as a result from the work from home environment is maybe kind of a speeding up the process for adoption of cloud computing. I think I've heard this from a number of firms where, they might have been on the edge about kind of, migrating the certain systems over or even starting the process. And this kind of work from home environment has kind of put an impetus on them to kind of have that more seamless ability to kind of, have staff work from anywhere, have systems all centrally or data all centrally located, and be able to kind of analyze information on various scales, right? So as data sets may increase or decrease over time, have the capacity to be able to deal with that on a very kind of seamless basis.
Let me ask, before we come back to this one, where are you all in your journey into the cloud as your organizations and as regulators, if you're overseeing the industry's migration to cloud computing? Anybody want to talk about that?
Yeah, I mean, I think we. Oh, sorry. I think we take a proactive, ever more proactive approach to cloud. I mean, ING, we've got our private clouds. We've also got multiple uses of like public kind of cloud. So, but obviously there is still security risks around those and control risks around those. So I think the market is still somewhat cautious around cloud, although we do see and I see personally internally an ever more move to cloud, working on the cloud, and I think this will progress. To Jaime's comments.
Anyone else?
Maybe just to add on to what I said before, FINRA was one of the earlier adopters of cloud computing, and as of now, have most of our systems on the cloud and have quite a bit of data on the cloud related to kind of market surveillance related issues. In terms of externally facing, I think one of our big initiatives for this coming up year is really looking at how the brokerage industry is making that migration over to the cloud. There's a lot of different models for that. You have some kind of fintech type of broker dealers that basically started cloud native that have only been around for 5 or less years, and basically when they designed their whole system, they started off completely in the cloud. You have others that are kind of big institutional players that had several different legacy systems from just result of mergers that existed, and then now are using various types of cloud providers on top of that. So kind of integrating that, or kind of seeing which lines of businesses that they use for cloud computing. I think that presents certain challenges for them as well. And then you have pretty much everything in between, where you have mid-sized firms or other firms that may not necessarily be tech savvy, who see some of the benefits of the cloud, but really having to kind of build either kind of import internal expertise in terms of staffing up and ramping up in the area, or work with outside third parties in order to kind of develop to at least have that level of expertise to see how they would make the migration over into the cloud.
Thanks, Jaime. Was someone else?
I wanted to make a quick comment to share that on the BA side, we monitor the use of innovations across the largest and the sample of EU banks, and then we particularly look at also the use of cloud usage. And then over the years, we see the tendency to increasing interest and focus on the use of cloud solutions, which was encouraging. If we compare statistics a few years ago, there was a number of institutions which were afraid to even consider these topics. But following the EBA recommendations on the outsourcing to cloud, now revised guidelines to outsourcing, which cover the guidance on cloud, we see more an increasing use of cloud service in the business of the financial institutions, which is encouraging.
Yeah, it's very challenging, but we'll never have the full promise of RegTech fulfilled unless both the regulators and the industry essentially move to a cloud computing basis where they can really manage data in new ways. Let me turn to the regulators' perspective on your primary areas of focus for the coming year. And Melissa, let me start with you.
Yeah, well, just to build off of what you just said, I couldn't agree more. I mean, all of us need to look at changing technology, and especially now, as we've had to rethink how we regulate, how we supervise, even if and when we're able to beat this pandemic. I think all of us have thought about, how do you go back to what it was before, knowing what we can do now. And so in terms of our priorities, the commission itself will have a number of priorities to focus on in this area. Over the past few weeks, we've just announced reorganization, where we created a division of data and a division of technology, both of which, very early stages, but both of which will be focused on these efforts and in a lot of the talk and discussion that we've had already today. At the lab CFTC, a lot of our focus most likely will be around the area when it comes to digital assets. Digital assets is, for those of you who aren't as familiar, but digital assets are the focus of stable coins, virtual currencies, things like that, and how that hits into our markets. We'll also be looking at how we can help internally inside the commission as the division of data and division of technology get up and running, and how we can help identify what tools there are or RegTech initiatives there are out there. One of the things we've heard since the pandemic, and we've had a number of folks come through our office hours, a lot of people are talking about the tools that they provide to the market participants that we govern to help them also. And so we continue to highlight those things internally as well.
One of the things as a sort of a subset of this question that is getting a lot of conversation is a shift to machine readable and machine executable regulation. The UK has pioneered a lot of this work, the Bank of England and the FCA, and the G20 held a tech sprint this year that I was a judge in that has really been driving progress on this. Melissa or other regulators, do you have thoughts on whether that is coming soon and how transformative it might be?
Yeah, I think there's a focus, especially now, right, about how to think about that. But I just want to caution everyone, as we've been saying, regulators don't move fast, and when you talk about legacy systems at all of at the industry level, it's 10 times that at the government level, and we also don't have that innovation mindset as much as easily as we do in the industry, right? We can't launch and then have it fail and then launch it again and try again. We make sure it's absolutely perfect before we even get to the launch stage. So I think it's on the horizon, and this is, I guess I should say, Jaime's disclaimer. These are my views and not those of the commission, right? But I could see it on the roadmap for a number of the U.S. regulators and coming down the pike. I would say be patient as we go through that process internally and the time it may take to get us
Vaidodis, let me go to you.
Yeah, and if I could just add to that, I mean, this is an area that we are actually very actively engaged in. As Melissa notes, it's for us, it's probably going to be a multi-year process, but it's one we already have underway. We developed a pilot program for a machine-readable rulebook that was basically a proof of concept, but also actually had kind of working software around it. And what it involved is basically having metadata that gets embedded within the rulebook that allows you to better decipher what the rules relate to. For example, if you are concerned about disclosure requirements in the rulebook, you could click on a tab that says disclosure. And if you are, for example, a certain type of broker-dealer, for example, like a clearing broker-dealer, you could say I'm a clearing broker-dealer, care about disclosure, and I care about record-keeping requirements. You have a cross-filtration process that basically will then pull for you the rules that relate to those kind of 3 elements or more elements, depending on what you do. And this is enabled by the fact that you tag the rule books based off of kind of business level types of functionality, for example, like disclosure or record keeping and so forth, or the business type that the firm actually is. In addition to that, you could potentially import that through an API protocol so that you can overlay that on your own policies and procedures that exist as a firm. For example, if you have your own policies and procedures similarly tagged, if there's an update to a record-keeping requirement, then a firm would know that it's got tagged by record-keeping. They'd have to similarly update their policies and procedures that relate to record-keeping related to that type of item. And this is one where we believe holds a lot of promise. And as I mentioned, we already have a pilot that's been developed. We're actually now in the process of looking to do that within the context of the entire rulebook.
I want to have you, Vaidodis, come in on this question on the regulators' priorities, and then we're going to have a last question after that. So to the audience, please be sure you're submitting your questions for the panel because we're going to leave time for Q&A. But Vaidodis, when you look forward, what do you think are the main focus areas for regulators?
So sure. So just briefly mention this machine readable, machine executable. It's on the agenda. We speak about it, but we are quite open about the practical and exact technological solutions. So this is not the only option to go forward. And as you may know, in Europe, European Commission has recently published its digital finance strategy, which identified 4 priorities going forward, how to transform the European financial sector. So they speak about removing fragmentation, adopting EU regulation, promoting data-driven innovation, and addressing any challenges. And the European Commission put itself an ambitious target to amend the European legislation in a way that it would allow standardized and machine-readable disclosure and formats. So that's something in the long term, let's say at least a couple of years to get there. Of course, there could be benefits, but also there are challenges, and we need to closely assess the feasibility of this. But next year, we are practically at EBA working on the practical solutions related to reporting, cost of compliance study, and feasibility of integrated reporting, where we try to bring together reporting on statistical, resolution, and prudential purposes. So we investigated how we can streamline the whole process, covering the whole value chain from data definitions to data collection, then data transformation, and then data explorations. So these reports are coming mid next year, so stay fine-tuned to learn more. That's reporting side. But of course, there is a broader picture. As we discussed, there is the technology supporting here, and we are talking about RegTech. So again, very important focus on operational resilience, on the governance, third-party outsourcing risk management. All these will be important. And there were guidance from the EBA on ICT risk management, on the outsourcing. European Commission is making proposal on Digital Operational Resilience Act, really how to manage ICT risks across the sectors. That's an important piece of work coming here. And last but not least, because we're talking about the RegTech, we are working on the RegTech report. We are speaking with the banks and RegTech providers to understand what are the challenges, what are the risks, and how to facilitate the scale-up of RegTech solutions. So that will be also important for going for the next year.
Great. So we have one more question, and probably someone should mute if possible. There we go. We have one more question, and it's for Melissa and Peter. looking at the dynamic political environment that we are in today, we have just had the US election, which is still quite contentious. And then we also have in the UK, the new Brexit rules coming up. And Peter, I want to start with you to ask you about what you see as the outlook for that. And also if you want to add anything on the topic we were just on regulators' priorities for the coming year.
Sure, no problem. So let's start with Brexit and get out of the way. So basically, like everybody else, I'm afraid I'm waiting. We're all very interested to see what happens. We're waiting to see what kind of deal we might get, whilst also preparing for no deal, as we have been for the last 3 years plus. So really, I can't say an awful lot more than that. I think there's a couple of things I would say very quickly. So one is a huge amount of work has already been done for all of these potential outcomes, both ourselves, but also within the industry as well. And we absolutely recognise this. And we think the UK financial sector is better prepared than most sectors for whatever eventuality we're faced with. That said, we don't underestimate the scale of the potential challenge and the potential disruption. In terms of, I think one of you sort of what sort of our advice for financial firms, for RegTech firms, sort of in this space, and certainly on Brexit, I always say, kind of forget whether you were for or against it. Focus on what it means for financial regulation, and I think it actually genuinely does introduce a huge amount of change. And if I'm a RegTech, or if I'm working on RegTech in a financial firm, that's change that offers me an opportunity. It offers me an opportunity to encourage colleagues and customers to utilize more agile and more innovative ways of working. And I think through that lens, we can try and have a slightly more positive spin on what is a admittedly very, very, very painful process. Just very quickly on the broader point around kind of regulatory priorities. So you mentioned machine readable, machine executable. So it's something that I've been working on with colleagues at the FCA and the bank for a long, long time. We think there's a huge amount of promise here. I'm actually quite bullish on the technology. I think the tech is effectively there. I'm incredibly cautious, like Militia, on the policy and the governance and the legal questions. This is something that regulators are not traditionally particularly good at. It's going to be really hard to make this change. And the way I frame it is it will be soon, but it'll be a regulatory soon. So regulatory soon is like 5 to 10 years. That's not an industry soon. So that's kind of the space that I'm in. But yeah, there's real benefit there. Beyond that, we're continuing to do loads of things. The only thing, all the things that you mentioned so far, the only other thing that I thought I would just flag very quickly is we're starting to have some really interesting sort of data ethics discussions around what a digital regulator actually looks like. And I think we'll see more and more of that in the next 12 months coming up.
Yeah, machine executable regulation has the potential to be the biggest game changer we can imagine, I think, other than maybe central bank digital currency. But really, thank you for those really interesting comments. So Melissa, we're not going to ask you to be a political pundit on the US election, which is a complicated topic. But as you think about shift in motion in the United States, what thoughts do you have for 2021?
Yeah, thanks. I was going to say I'm not going to talk about it from a political side. I still need my job, but I just to give some context. I mean, there obviously could be an administrative shift, and in terms of our priorities, whether it be at the Commission or other financial regulators. And so, for those of you that are listening, again, just to harken back to what we've been saying, right? Regulators take a long time, and regulation takes time. Should there be changes in the financial services regulation or even financial services overall, the laws itself, that's going to take some time because then you have to take into the account Congress and getting Congress to help with those efforts. That being said, despite the changes that will probably occur at the top of each of these agencies, the initiatives at the division level probably won't change as drastically. Career staff will still be around, and innovation offices are still there. And so I guess it goes back to what we've been saying before, even though there could be changes down the road, just because there's no actual regulatory action, or in some cases a legislative action here in the US, it doesn't mean that what you're working on isn't innovative. At the Commission, we follow principles-based regulation because we don't want to, pigeonhole specific technology into our regulatory structure. We also want to promote innovation, responsible financial innovation. And so we'll be continuing to do those efforts and having these dialogues, not only through our innovation office, but with innovation offices at my counterparts.
Terrific, thank you. We do have questions from the audience, so let me raise some of these. They're very interesting. The first one is, Ian, can you tell us about the recently launched Open RegTech initiative and how this could benefit the industry?
Great question. And yeah, so we've been working with AIR, Joanne's not-for-profit organisation, and Finos, which is part of the Linux Foundation.
Not this question. I'm sorry. I said I did not plant this question, but it's...
Oh, okay. Good. And the Linux Foundation to see how we can help establish open source for regulation. One of the challenges that we see is like firms are global by nature, and obviously regulators take different stances, countries take different stances towards regulatory innovation. But actually, there needs to be a common place where we come in together as an industry, and we think the open source domain provides huge potential for this. And the work that Finos has been doing within the industry has been kind of groundbreaking to date for fintech interoperability, for some of the open source data standards. And it really enables a new platform out there for the industry. So we want, obviously, as many financial institutions, as many regulators, as many tech firms as possible to promote in that. And obviously, we'll be putting that through the GitHub where everyone can access. So I think it's a great opportunity for the industry.
Yeah, open source hasn't been discussed too much in the regulatory realm, and we're really hoping that that's going to change, that people will be able to build on each other's work all across the globe. Second question is, post-COVID, how will regulators increase collaboration with market participants and ensure regulatory efficiency and reduce the burden of compliance from market participants? So for any of you, the issue of faster, better, deeper collaboration is a huge topic, I think, especially in the COVID environment. Anyone have thoughts on that, how to increase it and make things more efficient?
I'll go.
Well, I think, go ahead, Melissa.
Oh, sorry. Regulators, a number of us are part of an organization called the Global Financial Innovation Network, which has 50 to 60 regulators around the globe speaking about innovation efforts and working together, collaborating what we see, what folks are talking to us about, what we see in our industries, how we can help each other, especially in the RegTech space, tools others have used, how the challenges they've seen, things like that. That's an effort that's underway. I would say my personal viewpoint with COVID, I think it's only spurred even more action through this organization to continue to collaborate more. Secondly, I would just say, I think that a number of us have been collaborating already, but I think as you see more and more in the technology space, more and more technology and more regulators welcome the uses of different types of technology and innovative ways to do things in the market, you tend to see more collaboration with other regulators, as we're hearing from folks in the industry of what they're doing. That being said, I know I sound like a broken record, but continue to talk to us about this. We hear from you. The only way we can learn is by hearing from you of what you're seeing and the efforts you're doing, the technology you're using, what problem it's solving, and why you think that technology will help you and help the industry. Though without those conversations, we can't, we also can't keep moving forward.
So your answer actually touched on another one of the questions we have here, which is, Will regulators across different jurisdictions increase the work they do together to iron out conflicts and provide a more harmonized global approach to regulation? Peter, I might give that to you. The UK kicked off the GFIN, the Global Financial Innovation Network. Let's start with you, and if anyone else wants to add.
Sure. So I think so if I think about my experience in this space over the last kind of say 5 years, I think there's been a huge shift to increased collaboration between innovation hubs in different jurisdictions. So across regulatory community, and that really has grown quite a lot. Both we see it across Europe, but also globally as well, and also with a number of emerging markets getting increasingly involved. And I think we're also seeing impetus, you mentioned before, the G20, the FSB, seeing more impetus at that level as well. I think the interesting thing that is starting to happen, and I hope will continue to happen going into the coming decade, is more and more collaboration, not just in the innovation space. So rather than it just being innovators talking to other innovators and saying, wouldn't it be really cool if we could do X or Y, actually starting to get lawyers, starting to get policymakers, starting to get central bank economists in the room as well, and actually bed that down into real change. And we've seen some of that happening. And I think we'll see, I really hope we'll see more of that. Certainly within the Bank of England, within the FCA, and within the UK regulatory community. I'm now having conversations with Cabinet Office lawyers that I wasn't having 3 or 4 years ago. So it is definitely changing. I think it will keep changing. I hope that that's the direction we're going in. There's a much more collaborative feeling across the entire community, not just within innovation functions.
Anyone else on that one?
Yeah, if I could just add to that, one of the things that the Innovation Office was specifically designed to do, at least our Innovation Office, and I think this is true across the board, is that, is to facilitate collaboration and facilitate collaboration with other regulators as well as with the industry itself, right? And to share ideas and information. For example, to the extent that we ourselves are using various technology tools and have insight around that, or are hearing about other firms that are developing various technology tools and insight around that, we can put out publications externally that kind of builds off of that knowledge and provides information to the general public, whether it be through investor alerts, where we give investors information about things like social media sentiment investing, or digital assets, or other types of topics, or whether it be in the form of things that are kind of a little bit more detailed, they're designed kind of for industry professionals, such as the AI white paper that we previously put out. But the idea is that it's not just a one-way street where we are kind of putting out information, or we're just getting information from the industry, but it's really a dialogue where we are kind of sharing knowledge and building upon that almost as a building blocks. And similarly with the work with the other regulatory agencies, I mean, IOSCO and FSB have kind of all been here before kind of the big push around innovation over the last few years. But building on that, IOSCO has a fintech network that focuses specifically on innovation-related issues, and then that network has dialogue with other parts of IOSCO that are more focused on policy-oriented issues. And as Pete and Melissa brought up, for example, GFIN, which was formed recently, has different elements of collaboration, where there would be looking at things like RegTech, or looking at things like sandboxes that some firms, that some innovation office may have, that allows for people to collaborate based on kind of where they are right now.
So we are just about out of time. This wouldn't be a RegTech conference without a crypto question. So does anyone want to give a 30-second answer to what are some of the major shifts that we're seeing in the regulation of crypto assets and what might be on the horizon? Or cryptocurrency?
Well, I'll try to tackle that. Since I didn't hear anybody else jump on it. One of the big things I think is going to be around stablecoins. I mean, I think that's already been kind of in the works now, but as you see various providers and various guidance, at least in the US, that people have been putting on, develop a structure around for how stablecoins can exist. And to the extent, that they may use, for example, on the cash leg of securities transactions that occur on a blockchain. I think that'll be an interesting development if that occurs. And the other thing I would just note is this idea that DeFi, where you could have decentralized systems that has the ability to kind of serve as an intermediary between peer-to-peer transactions. I do have, just to be candid, I have some reservations around that, because regulators like to look at a certain entity that we can say if something goes wrong, we're looking at you and we're making sure that, the investor or the underlying customer is made whole. But one cannot deny that it's been gaining quite rapid speed over the past year, and I think there's still probably some more work, more growth in the years ahead. It's an area that we've been keeping a close eye on.
Yeah, a topic for another day. I want to thank you all. I wish we were together so I could invite a round of applause for our wonderful panel, but it's been fascinating to listen to you. So thank you so much.
Thanks, Joanne.
Thanks, Joanne.
Thanks, Joanne.
Thank you very much.
Thank you, Joanne. Yes, I'm back to take over for the remainder of today. Fantastic session there, everyone. Really appreciate it. I think we had 4 regulators on a single panel. That's probably unprecedented for us. So really good to get some great insight from those guys. Great job by Joanne, keeping it all online and to time. So thanks for that. Now, we are now to move on to our next session, which is a roundtable Q&A on leveraging RegTech in today's complex regulatory environment. I can see that my panelists or roundtable participants are joining. So let me introduce them as they do join us on video. We've got Mark Salter of ACA Compliance Group, Simon Cole of Automated Intelligence, Ron Finberg of Capitec, Linda Kaufman, SmartStream RDU, Bill Hauserman of Bureau van Dijk, and Larry Chopra of Axiom SL. What we thought we would do here is bring in some experts from our sponsors to talk about some of the issues that they are facing in the marketplace, from the cold face, if you will, really to look at which major regulations their clients are dealing with, how emerging tech is helping them and their clients to add most value as they seek to comply in today's fairly complex and changing environment. We'll talk a little bit about barriers to adoption and hopefully be able to pick up some advice for people who are trying to get projects done, for people who are trying to sell into regulated firms to move them forward on their compliance journey. So without further ado, we only have about 30 minutes for this. I would ask you, the audience, to feel free to ask questions on Slido. I'll be checking my Slido on my phone periodically, but we've got a few questions that I'll to set the conversation going. So let me get the gang engaged and ask them all to name one regulation that is presenting their clients with the biggest challenges as we head into 2021. So let me, on my screen here, I can see Linda looking straight at me from the middle of the screen. So Linda, I'm going to throw that question to you first. What do you see coming up?
It's funny because we often hear from clients about challenges with existing regulations, not upcoming new regulations. Don't get me wrong, we still hear enough about the new regulations, but it's the unforeseen bumps on implemented solutions that cause the biggest challenges. So I think at the moment, those for us in the reference data space, we're having conversations mainly around SFTR. And there's only a couple of reference data fields, but in particular, that very tricky security type that's kind of throwing everyone. So that's where most of our discussions are happening at the moment.
Very good, thank you. Bill, let's go to you. What are you facing?
Sure, thanks, Andrew. And I'd say that most of our customers, particularly in Europe, but really throughout the world, are facing the 6th AML directive and looking at it and saying, okay, it's August 3rd of 2021, but I can't possibly adhere to it because of the depth at which it's asking me to travel in terms of my due diligence program and process. So I'd say that is one that has the most angst, because they're really, the directive is trying to really solve a problem in terms of actually slowing down the money laundering, but it's the predicate offenses around that necessitate. If they don't have money laundering, you can't launder the proceeds. So I'd say that's the one they're really feeling the pressure on, and suggest that over the next 24 months, particularly, the EU is actually going to get together and say, hey, you guys have to do this.
Very good, thank you. Harry, let's turn to you.
Well, it's IFR, which is sort of market and credit and large exposure risk for investment management firms above 30 billion in assets in Europe. It's SFTR, as Linda said, also for securities lenders. And for the banking industry, it's really the Basel IV capital and liquidity risk journeys. And finally, in the US, the Federal Reserve just announced NSFR, net stable funding ratio, as a rule to be complied with middle of next year. So lots going on in this space.
Thank you very much. Let me turn to Mark. What are you looking at, Mark?
Well, actually, you know, I will second what all the other panelists have said, but from what we're seeing from a client base is almost going up a level. They're worried about, you know, just what's happened in 2020, how COVID has, I say what we've termed internally at ACA, risk mutation, how a number of factors have changed the playing field, and they've taken a step back from the underlying regulations and just, you know, more concerned with how have things changed? How does their outlook on these risks have changed over the next 12, 24 months, and kind of gone, okay, what do we need to do to be adaptive and be able to keep track and, you know, keep one step ahead of all the moving parts that have now really occurred?
Very interesting. Let me turn to you, Simon.
Yeah, funny, we have the same challenge. It's really, there are the specific regulations that we see, but the overarching issues of 2020 have really brought risk as an element into the fore. So we find a lot of people are trying to work out, you know, from a, you know, capital requirements business, what can they do to mitigate risk to try and bring down some of the effect of those controls and ensure that the underlying business is under less stress. Given these challenging times, but you know, the old ones of the data privacies are still there for us. We're looking at unstructured data for people, so really, data privacy looms large in people's front and center for the next period still.
Very good. And finally, Ron.
Thanks. So it's not necessarily a specific regulation, but I think Brexit in the immediate is an area where just, you know, it covers everything. So we know we're looking from the transaction reporting focus, and we're fielding a lot of questions, just, you know, what's the best way to handle in the future if a firm is, you know, working with a UK arm or trade repository, whether based in the EU or the vice versa. So that's probably from immediately right now where people are looking at focus. That's Brexit and how it affects regulation.
Sure thing. And of course, we're all sort of I'm sitting here in Canary Wharf in London, and we've still, with just days to go, really no idea what Brexit is going to look like. But we're not worried at all about that. Okay, we've got so many things going on. We think these just water off the duck's back. Let's go to the next point, and this sort of builds on a poll we did in an earlier session. I was watching the earlier session, and it's about compartmentalizing some of the regulations that you guys just discussed. I mean, if we were to compartmentalize the regulations you've mentioned, what do you think, what are the headline functions within the businesses are most impacted? In other words, what client business areas are most affected, do you think, going into 2021? And just as you think about that, folks on the panel, the audience were very much, when we asked a poll, a similar kind of question in terms of which areas of the business, KYC was very much on their radar. for next year. So let's go in reverse order. Go back to you, Ron. What sort of business areas do you think are going to be most affected? You mentioned Brexit. That's sort of everything. But which bits of the business are going to be hurt by that, or helped, should we say?
Sure. So I think it puts a lot of stress on the back office functions, and that's obviously been with COVID and people working from home has made additional challenges, and it's just a matter of it becomes a data play, and how are you collecting that data that's needed for different regulations, and how are you getting that information from your clients, how are you updating it? So I think the back office is probably been with changes involved with Brexit and just the current environment we're in has been probably seeing more challenges in other parts of the business.
It was interesting on the last panel that Peter from the Bank of England said an awful lot of work has been done behind the scenes to look at every possible outcome of Brexit. So it really has been quite a lot of work, I think. Simon, in terms of where you see business areas impacted.
Yeah, I guess we're seeing most of the impact in the data office, chief data office, really, in terms of, and that's maybe with today and what we're seeing with COVID and the need to ultimately try and manage what we have out there. And with the reality being that information is being consumed in ways we hadn't ever anticipated and is living in places that we ever hadn't anticipated, trying to get a handle on that and making sure that, as we look at the regulations and as we build our business, making sure that we are still in control of the data, I think is one of the biggest challenges in the short term. Post vaccine and getting back to whatever the new normal is, I think we will shift back again to where we've been. But I think we see certainly in our clients that that data risk is massive right now, and that's what's really vexing people.
And on top of that, you mentioned unstructured data earlier. We've got this whole sort of emerging requirement, perhaps not in a regulatory sort of framework as yet, but around ESG. And it seems to me, as I watch that area of the business, a lot of the data that people are going to be looking at is going to be unstructured in that space.
Yeah, absolutely. And I guess that the challenge is, bringing structure to that unstructured data. What is the technology? And I know we'll get on. We'll talk about machine learning and AI as part of this, obviously. But what is the technology that we can use to draw that structure out? And that's massive for organizations. It's wonderful, the richness and the manner within which we can capture so much data today. But how do we identify that? How do we really bring insight into that and turn it into something that is meaningful and that we can ultimately measure ourselves against the regulation for?
Mm-hmm. Okay, let's go to Mark. Areas of the business, Mark.
Well, ACA, we're a compliance consultancy firm, so obviously we're seeing a huge burden placed on compliance teams, and that kind of sits, and directly as a result of the number of regulations that everyone is dealing with now, coupled with the fact that firms are, telling their compliance teams to do more with less. So immediately technology, is what has to come into play. I mean, we've seen a number of firms come to us and say that we've just got so many things that we're now having to do. We've got small compliance teams. So what does your technology offering look like? Are they able to outsource a lot of the, more labor intensive processes, some of which will be like AML and KYC, out to a firm like ourselves to do that initial lift, and they will do kind of the more detailed findings and analysis. So we've definitely seen the burden that the compliance teams have had to face as a real discussion point, and I think that's only going to increase over the next few years.
Now, we've been running at A-Team here, we've been running RegTech events for, I think we're in our third year now, maybe even more than that. And over the years, people have talked about sort of the holy grail of a compliance dashboard, the compliance office, the CCOs sitting there looking at dials and charts in real time. I mean, how far are we away from that, where people have a real hands-on view of how close they are to achieving compliance?
I think we're pretty far down that journey as we speak. I mean, I think a lot of the new RegTech offerings that have, come out over the last 10 years have really laid a great foundation for that to happen. Now it's about interoperability. And as we speak to a lot of clients about, it's about that enterprise dashboard, that minority report overview, where firms have invested heavily in kind of data lakes and good data cleansing techniques to really be able to have their data in the best way, shape, or form. Immediately, I think the regulator has helped drive some of that by obviously things like the transaction reporting requirements. And firms are now expected to be able to supply data for regulatory exams in a timely manner. So it's kind of twofold, that if you've got your data in a great format that you can actually reply in a time efficient manner to the regulator, that also means that you internally can use that data to kind of foresee potential risk areas within your firm, be that employee trading, maybe updating things from your compliance manual because of COVID. What do you do with the work from home aspect? Does your are your employees, as I said, doing more personal account trading? Are you, when you're looking at that, you comparing that to what your firm's trading? AML, KYC, instead of being all in disparate systems, we are now talking to clients about having that enterprise dashboard where you're pulling in that structured and sometimes unstructured data into one visualization and being able to dive down into. So I think we're there. Obviously, there's always going to be room for improvement, but the building blocks have been laid.
Very good, thank you. So going back to the question in hand and going back up my list, Harry, you're next. You mentioned IFR, IFD, buy-side, investment management. Which areas of the business is this going to impact, and how do you see that panning?
It's really the risk and compliance team. So people who have to manage the delivery of the K factors, which are the brand new set of algorithmic figures that have to be reported. That's going to be very significant work that needs to be done. It's brand new work for all of the investment managers. And the compliance teams, they have to make sure they deliver the equity shareholding disclosures in line with short selling rules or sensitive industry rules. So that's another element of work. So it's really risk and compliance teams. Same on the bank side, where you're looking at 100 basis points of your tier 1 cap ratio. If they get optimized, that's real money to a bank. And all of the latest Basel IV regulations that ask you to do your calculations in a both standardized and IRB approach, you have to really make sure that you optimize that whole calculation. So fair amount of work in both of the risk and compliance teams.
Very good, thank you. Bill, over to you.
So, I mean, everyone's touched on this, and Mark said it quite well. We have a real problem at the front end of the process now, because relationships are different and being formed differently today than any time in the past. So to get a handle on how to understand that relationship, be it a customer, be it a supplier, be it a distributor, that's the front end of a lot of these other regulations, that if you can't establish the relationship, the rest of it's never going to happen anyway. And if you establish the wrong relationship, there's a million other ways you're going to hurt yourself. And I think it's a reputational problem. So we're seeing it, I'm seeing it at much more of a holistic, any organization, any business unit that's forming a relationship. So KYC, you mentioned, that's obvious, but so is anti-bribery, corruption. And the whole nature of, we saw it with COVID, just international trade and the amount of fraud and money laundering that actually was happening. So I think that that's where we're seeing this is really the area that leads in terms of don't establish the relationship. If downstream, you're going to have that problem.
Very good. Okay, Linda, let's finally come to you. Areas that are impacted in the business side as you see it.
Yeah, I'm going to circle back and kind of what Ron was referring to in the back office. So we see that firms, you know, are having to bear some of the support and operations teams that support the business units at, currently. We're not managing the resources correctly when we start down these regulatory paths. So all of a sudden a firm adopts a RegTech solution, or they have to adhere to a new regulation, and there's kind of an afterthought about the resources. And so all of this great support that the front offices are receiving from their support staff and the operations teams, now those teams are spread a lot thinner because they have to also deal with a bunch of regulatory data management, exception management, and the whole lot of it. And so it kind of cuts into what the front office is expecting from those teams. And it's something that really needs to be looked at ahead of time instead of after.
Absolutely. Great, thank you. We do have more prepared questions, but we're starting to get some questions from the audience. So I'm just going to throw these to the panel, and we'll see what comes out of it. So let's see, the first one, the regulatory burden may be reduced for some firms over the years as the introduction of large regulations reduces and automation increases. So if that is the case, if that's really happening, i.e. that there are sort of broader regs and increased automation within the regulated organizations, where does the panel expect firms to invest resources that were previously dedicated to compliance? I guess the question is, are there opportunities to put resource elsewhere as automation kicks in? Anyone got a feel for that?
I can venture a guess. It's really on data governance, and you see that with the chief data officer function that is both in the buy side and the sell side now. And people want to get their arms around their critical data elements and make sure they have data dictionaries associated with these elements so that when we do report through automation, it's accurate and can withstand audits.
Very good.
Andrew, I just add one more thing. I completely agree with Harry, but also I would say that we need data expertise, right? So we need regulatory experts. You have all this automation coming in, but you don't know how to use it if you don't have the experts in-house to say, okay, this piece of the puzzle fits with this piece of the puzzle. So I think there's an opportunity for resources from a regulatory expertise perspective in the data management area in particular.
Very good.
I think the proof of compliance and monitoring of that is going to be critical. If the people who currently spend their time actually reading the regulations and understanding those regulations, if their jobs disappear because we get that feed inbound, then that burden of proof is going to pass to the organization in terms of how am I complying with this regulation. That's going to be pretty important.
Interestingly, the last panel talked a lot about cloud, but it didn't get too much into AI and machine learning. So almost reverse engineering this automation discussion. I mean, does the panel see emerging technologies like AI, machine learning, business process automation? I mean, where do we see them as really coming into action now? The real things that are actually happening rather than the promise of these things.
I mean, I can take it's the technology is there. It works. It was too expensive before. Now it's not. But that doesn't mean it's going to actually produce any positive results. So what we're seeing is the technologies are there. But I think to Linda's point, if you can't train that technology with subject matter expertise that is dead on today and dead on tomorrow and the day after that, you're going to fail. And then the other piece we see is the information, the data collected from the relationship with the third party, the data that we get from regulators, the data that's coming from commercial data sets. Blending all of that, the technology is well versed to do. Telling it how to blend and what to do with it to align with the regs, that's humans. That's people who have to train these algorithms.
Absolutely. Okay, last question then from me, which is a sort of a bit of an old chestnut, but it comes from the audience. How can new RegTechs get into a market characterized by large incumbent vendors, and what do they have to offer? So any thoughts on that sort of barrier and how to get in when you're perhaps a startup or an early stage supplier into a very sort of crowded and often sort of legacy dominated marketplace? Any thoughts?
I mean, I'll jump in, and I find this is quite an interesting question. You know, in my past, I've worked for some startups, now at ACA. But one of the things while talking to a large buy-side manager a few years ago, and it resonated with me, was he probably saw 2 fintech or regtech startups a month that came into their offices pitching, you know, a lot of the new technologies, you know, NLP, machine learning, et cetera, and said the products could do almost answer the question is yes, it can do anything they threw at them, but they never actually had a particular use case. So it was like, yes, our solution can do anything you want. And you know, the head of technology was just like, I'd rather they come to me and show me one use case. This works in this one simple way, and that would, you know, really be useful within your business, as opposed to saying, well, you know, we can do anything you need it to be.
Yeah, if I can add on to what Mark said, I think that's a perfect answer. He's like, you really need to have that product market fit and really understanding your customer. You know, if you're going to sell to a bank, and a bank, you know, for them it's all a matter of you know, they want to build things on their own, and the items that they're going to be outsourcing might be more like monitoring tools, and you know, but not necessarily part of their main process. So you know, you're not going to be, you know, that's not going to be your target audience necessarily for a small RegTech firm. And you have to just see where your product fits best with, you know, who's going to be most open to those type of products that you have, which companies are going to be looking for that. And typically, if you're a new firm, you know, you have to find a company that's used to outsourcing. You know, if you see them outsourcing different other parts of their other functions, you know, if a fund company is using different, you know, external third parties to help them with their functions, then they might be more open to what you're providing. So that's you know, find that fit, not only the product to the product you sell to the company, but also knowing that that's a company that would be perceptive to what you're selling.
It's almost about doing a bit of homework on the culture of the target.
You always have to do homework, and I think that's probably the biggest failure. Is a lot of people they think they have the best in the world, and you know.
I think too, when you're looking from a regulatory perspective, anything you do is going to have to integrate with something else. It's never going to be standalone. You're never going to have a platform that solves all of the bank's challenges, for instance. So ensuring that when you approach, you realize you're probably, especially if you're starting up, a small piece of a bigger play, and understanding your space within that. So, I mean, we've typically found, you know, coming in through the innovation offices, or coming in through partner plays are a much stronger way to get into the organization than trying to walk in the front door, because, well, frankly, you'll just not get the audience you're after.
I'd like to add one more thing. For an organization that has been doing this for 25 years, we constantly look for ways to disrupt ourselves. So we constantly look for ways to see what new business model we can create, be it technology-wise like Spark or artificial intelligence, or what we can do with the cloud, for example. So we are constantly looking to disrupt ourselves, because if we don't, somebody else will do that to us.
Very good. Okay, well, look, I think this has been an extremely informative and fun session. I've really quite enjoyed this little session. I think it's been a great taster of what's to come. All of the panelists that you've just heard from will be appearing on later days. I'll leave it to you, the audience, to check what days your favorite presenters are appearing. It's all available on the website, so you can check out which days you want to join us. Just to remind you all, we will be back tomorrow, 3 p.m. London time, 10 a.m. Eastern time, and we'll be back every day this week to discuss more and more issues around regulatory technology, and frameworks in our marketplace for getting that in place, either in your organization or for your company to push into financial technology, financial firms. So please make sure you join us. Check the schedule. Tomorrow's session is on preparing for Brexit and ESG and the impact on the regulatory environment of all that. Yeah, please make sure you join us tomorrow from 3 p.m. GMT, 10 a.m. EST, and I will see you then. So don't be late, and see you tomorrow. Bye-bye now.